Hello everyone, colleagues. My name is Vitali, and today we are going to learn a new strategy together, one that we use daily for trading on our own accounts. Our students have also used this strategy throughout our entire history. All investors use this strategy, so today I will show it to you as well. We also have a trading bot, a trading algorithm for this strategy, and it works. And basically, you can use this strategy either on your own or together with our trading bot. There will be two parts here. In the first part, it will be the theoretical section, where I will explain to you in general how this strategy works, that is, its logic. And in the second part, I will explain and show you in practice how we personally apply this strategy. So, without further ado, let's not waste any precious time and get started right away. Let me say right away that no strategy in principle should be taken as the absolute truth. Every strategy has its advantages and its disadvantages. By no means should you think that by using just one strategy, you will become a millionaire. Of course, that would be great. But no, in this case, you need to understand that the strategy is just a tool that allows us to earn money. By using this strategy, basically just this one, your monthly profit will be around 3 to 5%. Of course, it depends from month to month. What is it about? Mainly, this strategy is designed to work with gold. So gold is the main asset for working with this strategy. I tried to find parameters for another asset, but it just didn't work out for me. In other words, I haven't found any parameters that are as ideal as those for gold. Briefly, what is the strategy about? In short, if we take a gold chart and set it to the daily time frame, we'll notice a certain pattern. But before that, let me tell you that here we open only one, at most 2 positions per day. So we don't open 20 or 30 positions a day, just one. Here, we will also definitely use a stop loss because this strategy requires a stop loss. And its essence is that there is a certain pattern in the gold market. Now I'm going to hover the cursor over each candle and you'll notice one thing. Look, for example, let's start from the beginning of 2025. Here, the year 2025 starts right here. When I hover the cursor here, at the top, you see the letters O, H, L, and C. We're interested in H, which stands for high, daily high, meaning the highest point the asset's price reached during that day. And L is the lowest point the asset's price dropped to during the current day. So let's suppose this is the day. The pattern is that every day, gold moves $1 higher, but it can also move a greater distance or $1 less than the previous day. Almost always. Notice, I moved the cursor here. Here we have the high. Notice, you see, right now it's 2660.52, and on the second day it's 2665 and some change. So it moved more than $1 that day. Okay? So the strategy says that at the end of this day, when the day is about to close, we will place orders. I'll show you how this works a bit later. Look, I'll rewind the screen on purpose and demonstrate. Look, the rule is simple. Here our current day is closing. Today, let's say it's 11 o'clock at night and the day is about to close. At the upper boundary of the candle, that is, at its high, I place a buy stop, and at the lower boundary, I place a sell stop. My goal in this case, if it goes up, is to earn 100 pips or $1. Like this, roughly, maybe a bit more. I'll tell you the lot size later. Right now, you just need to understand the essence. Something like this, yes. So what am I doing? I'm waiting for a new day. Let's start recording. That is, let's launch it. See, it took $1. Super. What do I do next? When this particular position ultimately closes, I personally don't do anything immediately. I patiently wait for the entire day to fully close, and then, specifically before the very end of that trading day, I meticulously place a buy stop order precisely here and a corresponding sell stop order exactly here. If you look very closely and observe carefully, here we actually have just one single dollar. That is to say, it made significantly more. It made almost $5 whole, but we absolutely do not need to take all 5. We only need to take precisely what is rightfully ours. So it took it, closed, and moved on. Now, once we've locked in the position, we move on. You've probably caught the main idea. Now, I'll show you the same thing for a sell. See? It's the same here. It took more than $1 down, so I would open one buy stop here and a sell stop here. Accordingly, if I show you each day, you see here it took more than $1 up, here it took $1. So in fact, gold has this pattern where every day it either goes up or down by $1. Now there are also such moments. Let me try to find you an example where you can open 2 positions within a day. For example, let's look a bit into the history. I want to see where we had such a case so I can specifically show you this situation when you can open stops twice a day. Here. So look, let's suppose this day closes here. I would place one buy here and one sell stop here. So accordingly, on that day, the next day, both the buy position triggered and I made a profit on the buy and I also profited on the sell. So such situations also happen. Now, when we more or less understand the essence of our work. Now, when you more or less get it, you see it's the same thing here. This literally happened on Thursday. Taking this strategy into account, we made a profit on both buy and sell within the same day. You see what I mean? Now I'll show you clearly how you should use it. For example, here we have a candle. It has formed. This candle has a wick. This candle right here. This candle has a wick. So when the day closes here, what do? We place a position at the top at the high of the candle. This position, I'll call it a buy stop. Why? Because we only ever consider buying long positions when the underlying asset's price rises to this specific predetermined level. However, it's crucial to understand that we do not typically place these particular orders immediately during the trading day. We have to wait until a new candle opens. So in my opinion, the only downside of this strategy is that you have to wait for the new day to open. The new day opens at different times for everyone, but it's usually around midnight. For some it might be 1 in the morning, for others 2 or even 10 at night. But that's not the point. The point is that you should only place these positions when a new candle has opened. For example, a new candle opened here. Accordingly, we place orders here and here on this candle. Why at the opening of the candle? Because it's common for there to be gaps at the opening of a new candle, and we don't want that. So accordingly, we need to protect ourselves. And also, if you place orders on this candle before the next one has opened, you'll be charged commissions. So it's better to wait for the new day and open as soon as we see that a certain candle has formed. How is all this done? We place a buy stop at the upper boundary. If you have, let's say, I'll calculate with a capital of $10,000, for example, $10,000. If your deposit is $10,000, for example, in general, we'll use everything as if your capital is $10,000. If your capital is $10,000, you use 0.1 lots as a conservative approach. 0.15 lots is a moderate approach. 0.2 lots is aggressive. So I will be showing you using 0.1 lots. So always 0.1 lots. If we're talking about gold with our take profit, that comes out to about $10 in profit. If you use 0.1 lots, then for each trade you will earn $10. If you use 0.2 lots, then you will earn $20. If you use 1 lot, then for each of these trades, you will basically earn about $100. I want to say right away that here, as a rule, the position usually closes within a few minutes, very quickly. So if we open a position, it will always close very quickly. But there are moments, though they are rare, when the position does not close, and accordingly, you need to be prepared for the possibility that the position might not close, and you need to know what to do. So the secret is not about making money on this $1. No, any fool can do that. Our task is to learn to understand what to do when the market moves against you. And that will happen to us, and that's exactly what we're going to talk about. I'll set a buy order in green. There. Now we open a buy stop. Let's say if the candle has a high here, let's suppose here it's 3,364, and there's a secret here. The secret is that you should never set it exactly at the maximum. You need to set it just a little bit higher. This little bit higher is a very important factor because that little bit higher is the spread difference. In other words, we have to take into account the spread that the broker has. Believe me, this is the most important factor in this strategy because $1 is not the main thing. It's exactly this spread that matters. So when we open a position, we will use this maximum as the basis. Yes, where the candle went up, this part, right? Plus, we'll add this coefficient. The coefficient is plus 0.9. Accordingly, we will set the position opening at 3365.8. That's it. This is where our buy stop will be placed. That's it. So just a little higher than the upper wick of the candle by 0.9. Next, the take profit, TP in this case, will be $1. So this is plus 1, meaning the take profit will be 3,366.8. Here it is, the take profit. Basically, you can realistically expect to earn at least $10 every single day. However, as I have already clearly demonstrated to you, the dynamic market can indeed do this. Within the course of just one day, it can initially give you a profitable buy signal. then subsequently proceed to go for a sell, and also in the process make you that $1 additional. So no problem at all. Now I'll give you a secret, a life hack. And the life hack is that very often, for example, when the day opens, let's say the day opens, for instance, it gives you $1, meaning the candle goes up here, takes your take profit, then it comes back down here, for example, to the middle. Let's say to the middle of this other candle. And what do I do here? I set it up again. If it took my take profit and returned to the middle of the previous candle, I can set a buy stop again. So in this way, during the same day, you can catch at least one position, and at most, I've had 3 or even 4 positions in a single day. So this can happen. So friends, keep in mind that trading is like that. It might seem like $10 is not much, but believe me, in the second part, I'll show you how much you can earn in a year, and it will become clear to you. I'll show you with a concrete example. There you go. So here you understand, right? For example, when it turned around and went back, it reached the take profit from this point, then came back roughly to the middle of the previous candle, and I set up this position again, and it can come back and hit it again. It's very simple. That's it. This is a very important life hack. You need to remember this. Of course, you need to keep an eye on this. That's why we specifically create trading robots that take a strategy and use it automatically. So while you're sleeping at 3 in the morning, the bot is working for you. That's where our earnings come from. You see what I mean? Okay. So that's the first scenario. What should you do if, for example, it doesn't reach the take profit? Let's assume, just for simplicity, that I set my take profit here, let's say, and it doesn't reach the take profit, right? And starts to reverse. Actually, no, wait, I'll get back to the take profit in a moment. Okay, so with the buy stop, everything is clear. Now, how do you set a sell stop? Let's say our position could close somewhere like this. Like this. So we don't know which way the market will go, so I set both a buy stop and a sell stop. With the sell stop, I'm preparing for a short position. Sell stop, it's very important, not a sell limit, not a sell stop limit, but just a sell stop, sell stop. Remember that. You can write to us sell stop, it's the same principle. We work with lots of 0.1 lot. With each position, we'll earn about the same $10. Okay? So everything is the same. But let's suppose if here our minimum is 3,310, 3310.69, well, about 70, then here we need, if here we add a coefficient of 0.9, then for the sell stop we subtract the coefficient, 0.09. Accordingly, we will proceed to open a new position at the precise coordinates of 3309.0 AE8. Is that correct? Yes, 08. So accordingly, we should open lower by 0.9. That is, if the candle closed here, you see right here we need to open to place the order just a little bit lower. You see here, I have this distance, specifically within this $1. This is very important. This is the spread which the broker can use to play a nasty trick on you. Take profit is $1, a $1 move. So it turns out this is 3,308.8. You see $1 less than where we opened. When this happens, if the price comes back here, we take $1, great, we close the position. Everything is the same, we can catch both a buy and a sell within the same day. And basically, you see here too, we caught a sell first and then a buy. So it's the same thing here as well. You see, we caught both a buy and a sell. So be aware that this is something you can profit from repeatedly. What should you do when extreme cases occur? And extreme cases will happen. They will be rare, but they will happen. And you need to be prepared for them. For example, a position goes into buy, but doesn't reach the take profit. Roughly speaking, I'll set the take profit for simplicity. If you set more than $1, that's your problem, because now you have to deal with it. So I'm telling you that we use statistics. Set it to $1. If you set it to $2, then you'll have these problems more often, and they'll be bigger. And believe me, it's not worth all the stress. Now, for example, you set it to $1, it didn't reach your profit, and it starts to reverse in the opposite direction. So here you have a very specific and precise 0.1 lot on a buy order. As soon as it doesn't quite reach its intended take profit level, it immediately starts to reverse its direction. What exactly do we do in this particular situation? We absolutely need to carefully set a crucial stop loss position at our predetermined and safe level right here, ensuring our capital is protected. Stop loss. Where will our stop loss be set? Our stop loss will be set where our sell stop is, at the very same level. So if our sell stop is set at 308.8, then the buy stop loss, this one, will be set at the same place. But don't rush to guess or assume anything yet, because I'm sure many of you will say that this is illogical and has no fundamental basis. But I'll explain everything to you right now. We set the stop loss at 308.8. Absolutely. Accordingly, in this case, when this happens, we will be accumulating a loss here, meaning we will be losing money. For example, you see we lost, well, for simplicity, I'll say $54 on this move. $54, meaning the movement. Not the money in the deposit, but specifically in the movement. This is what we're interested in. But as soon as we see that we have this situation, what are we going to do with our sell stop position? We are going to double it. That is, if we have an emergency situation, and there can be such cases, then after the sell stop doesn't take the buy, you'll notice it quickly. Why? Because if the position doesn't close within 1 or 2 hours, then most likely you'll see your candlestick reversing. When your candlestick reverses, believe me, you have plenty of time, because these are daily candles, to set your position, to set it up yourself. So there's no need to panic, worry or cry. Believe me, these are daily candles. While the daily candle is moving, at most it will happen after lunch. Yes, that's when it will occur. So when you have this situation, we set the sell stop at double the size, meaning we increase its volume. So now it won't be 0.01 lots, but 0.02 lots. And now we'll have a different take profit. If yes, our stop loss is triggered here and we take a big loss, at the same time, the moment the stop loss closes, a sell stop is immediately opened. The sell stop is set at double the volume, meaning twice the size. Why do we set double the volume? Because now our goal is to break even. We don't have to make a profit from these positions, but we do need to break even, because stop losses will be very rare for you. And why do we set the volume to x2? Because we need the asset to make this move, but we set it to x2. Why? Because we don't need it to move $54. It's enough for it to make a $27 move like this. And here our position closes at break even, offsetting the previous loss with this doubled profit. If you have any questions here, write to us and we'll give you a consultation. Now this is very important. Here, if you take a minus 50%, you'll break even. But I already advise you not to take minus 50% of this distance. For example, when we have $54 here, not minus but 50%, or rather minus 40%, because that way you'll earn a little more. That is, you'll recover this loss and also make a bit of profit. You'll cover this entire loss and also earn extra. Now what else could happen here? It could happen, for example, that this usually doesn't occur within a single candle. That is, it could be that the candle comes back here and then another candle opens here. Most often, this doesn't happen during the same candle. For example, here another candle opens. When another candle opens, we don't move the take profit anywhere, it stays as it is. We don't do anything. But what exactly do we do in this situation? We need to set a stop loss for the trading position that was opened right here. If we opened a position roughly around this point, and a new candle has now opened, indicating further market movement. Where should we set the stop loss for this sell? The protective stop loss order for this particular selling position will be precisely set at the highest point reached during the current trading day, specifically located right here at the very top of the price action. Why? Because gold starts to enter the channel. When gold starts to enter the channel, pay attention. You see there's a channel here as well. You might get stopped out once or several times, but then an impulse happens and you exit on that impulse. You see there's also a small channel here, then an impulse. Look, here as well. Where? Right here too, there's a small channel, then an impulse. Here as well, a small channel, then an impulse. So we know that it can go into a channel, but gold always makes an impulse on any news. Whether it's war, no war, interest rates, or some important events coming out, gold always reacts. Gold isn't the kind of asset that just stands still, so it's actually quite interesting and pleasant to work with. That's it. Now, let's say you've entered a position. What do we typically do? We move the stop loss. For example, let's say the candle closed here, is but precisely at this high. We move this stop loss to this specific candle at the very moment the new candle begins to open. And at this level, you set the stop loss for your sell and a buy stop that's doubled compared to the previous one, so it will be 0.4. A buy will open for us and the stop loss for this position will be triggered. Here we'll have a certain loss. But where do we set the new take profit? We set the new take profit by adding up the first loss, which was this one, and the second loss, which was this one. So it comes out to about 42 plus 44. That's in the movement. You see, these 42 plus 44 are the dollars that the asset moves up and down, meaning it doesn't find its direction. 42 plus 44 equals 86. We divide 86 by 2. By 2 because we have 2 losses, so that gives us 43, right? And from these 43, we subtract 40%. Why 40%? because in order to recover this loss, our volume is doubled to 0.4 and we end up in profit. So it's enough for the asset to rise, let's say, by about $25, maybe 26. And at this point, you'll have a take profit set, which will fully cover these two losses. How reasonable is it to work with this strategy? Here we have a trading robot that does all of this for you. You see, I set the take profit to $1. I set all the parameters that I consider necessary for it to work. And I'll even turn on visual mode for you. What does visual mode mean? It means you'll be able to watch and understand in real time how the algorithm works. You see, it waits for the candle to open. See? Every time, all these moments, it processes and earns. Let me slow down the speed a bit so you can watch. Look, this candle is about to close. I'll make it a bit bigger. Here we go, you see the candle has closed. It's top notch. Now look, it immediately sets the stop loss. And take profit. See, the stop loss is set where our reversal sell stop is placed. So, thanks to these moments, even if you take a loss here, you'll make up for it later because you have this kind of doubled position. Let's watch. I'll speed it up a bit. Look, almost every time it reaches, it always takes the stop loss. Yes, as I mentioned before, you see there are moments when the robot can open both a buy and a sell and take profit from just a $1 move, right? So if I look at the history, each position has $10, $10. Let's see if maybe we can find a situation where we had a stop loss so you... wait, I think there was one here. Let me check now. So here there's nothing. Well, anyway, it's not important. Here we have an open, a close, an open, a close. Let's keep watching. Having a stop loss is of course quite a rare occurrence, but they do indeed happen. As soon as these specific events occur, you see every single time it's an open close, then another open close. I think at some point in time it must have certainly happened, but still, despite these challenging situations, the sophisticated robot completely and efficiently handles all of these complex scenarios, ensuring smooth operation. So this is how the essence works. Essentially, you can clearly see how everything unfolds and happens in real time, right before your very eyes in a continuous flow. And it doesn't matter which direction the algorithm moves, whether it's up or down, the bot always does its job. There you go. What else? Let's take a moment and pause here for a little bit, because in order to fully show you precisely what was truly happening, I will proceed to turn off the visual mode and then carefully set it so that it just runs through all of the various positions, allowing for a more detailed observation. Here I have it set to accelerated mode. I'll set it to every tick, which is the most realistic, the most accurate backtest in this case. And here you can see how the balanced line is built, the blue one, right? And the green one is the equity line. Here we had one stop here, I didn't notice it earlier. Now you see, by the year 2025, with such a very conservative and cautious approach, this particular bot is actually performing quite excellently indeed. Now let's wait for it to finish running to the end. At the time of recording this video, it's now July 1st, 2025. I recorded a similar video back in December 2024. The results were about the same. Look, you see there was one stop loss that it caught here, and the drawdown here I think was even less than 10%. Let's take a look at the backtest. So you see the drawdown is very conservative. Now let's see what happens if I set a slightly more, let's say, aggressive format, not 0.01 but 0.02. In principle, we could earn more, but what I'm interested in is I still set it to 0.01 because I want to see what happened in 2024. So you can easily earn well yourself by applying the same logic. You see, there's one drawdown. Here at the very bottom, you can clearly see the important dates. And as you can clearly see, this particular trading strategy works absolutely perfectly, and you can gradually, little by little, steadily and consistently take your well-deserved profit from the market. As you can see, we had one drawdown here at the beginning of the year. Here's another significant drawdown that we experienced in May. These are very conservative settings. For simplicity, I can just stop it and set slightly more aggressive settings, for example 0.25. For simplicity, I'll set it here so that it does everything faster, so you don't have to wait. Here you can basically see how the equity line is formed. And here we had a situation where there were 2 drawdowns, and from 2024 to today, there have only been 2 such moments. I'll go ahead and run a backtest. In the backtest, you can see that there was only 1 time when there were 3 stop losses in a row. At the same time, as I already mentioned, this is the kind of strategy where you just set it up, and over this entire period, we earned another 12,000 in profit from an initial 10,000. You see, 13. So that's 130%, in my opinion. That's a very good result after a year and a half. If you want to test this algorithm, contact us. We will give you a trading robot that can basically do all of this for you. That's all for now, friends. Peace to everyone. Bye-bye.